And now, our Perspectives from Wall Street panel discussion, moderated by Joe McGarvey of GENBAND.
Hey, everyone. That's great. I was told there was a podium out here, so I'll improvise. Welcome, everyone, to Perspectives from Wall Street, which is our final panel of our agenda. I hope everyone's had a great time. Good. But I didn't get any derisive laughs or applause when I said it was the last panel of the day, so that's a good sign, I suppose. The rich are different than you and me, or so said F. Scott Fitzgerald, circa 1920, 1922, famously. Besides being one of those obvious statements ever uttered, the quote's handy, and it sort of validates the fact that you can comfortably segment pretty much the entire general population into two groups: the wealthy and those who aspire to be. Right? And what those two groups have in common is that they listen to our next group of panelists. So again, welcome to Perspectives from Wall Street. And at this point, I'll bring out the panelists, no particular order, actually alphabetical order. So please welcome Dmitry Netis, Senior Equity Research Analyst at William Blair. Dmitry, thank you. Okay. And welcome George Notter, Managing Director, Equity Research Communications Equipment at Jefferies. Hey, George, how are you? Please welcome Mark Su, Managing Director and Senior Technology Equity Research Analyst at RBC, Royal Bank of Canada. Mark, thank you. And finally, Catharine Trebnick, Managing Partner at Northland Capital Markets. Something to sit down, okay. So welcome, everybody. You guys have the longest titles. I'd ask for business cards, but like 8x11s, I assume you'd throw out. I thought GENBAND folks were bad about that. The purpose of this meeting, really, of this panel, is to create a portrait of the telecommunications landscape as painted by the men and women who sort of focus on the financial fortunes of the various stakeholders. Ground rules are pretty simple. I'd like to, if I don't forget, at about halfway through, in about a half an hour, I'd like to go out to the audience for some questions. So keep that in mind, keep thinking some questions, and then we'll stop in about 20, 25 minutes and get some questions from the audience. Otherwise, my plan for all of you, I hope you can hear me, is to sort of just throw out questions, right? And then as the spirit moves you, sort of like a Quaker meeting or something, just as you enlightenment, just go ahead and respond to it. And I'm hoping we'll get a lot of interplay too, a lot of feedback between the panelists too. Okay. So I'll just start it off with something really general, right? I'd like to take the temperature of the financial markets, the environment out there. You hear different things. There seems to be some high-profile things going on. American Airlines, Heinz, right? At the same time, you hear about some historic lows in terms of activity, in terms of market, in terms of M&A and IPO and that such thing. What's going on out there in terms of overall and the tech and the telecom sectors in particular? Are they following suit? So, sure. Anyone? Does anyone want to start off? Mark?
I'll start off. I'll just kind of give you an overview of where we are with the equity markets. And if you look at the stock markets are generally leading indicators of the economy. And if you look at the major indices now, we just finished the first quarter, the Dow is up almost 10% for the year. The NASDAQ is up 13% for the year. And if you're looking at the Dow, it's actually close to its all-time high, and the NASDAQ, it's close to its 10-year high. So investors are actually very enthused about the outlook. I think things are generally getting a little bit better in a lot of the industries. When we look at the technology verticals, we're actually seeing very good performance from some of these technology stocks as well. So we're actually quite optimistic about the back half of the year. From our capital markets desk, we see a good pipeline of companies that want to go public and take advantage of the good markets. And I think the worst is already behind us, and we're looking ahead to growth for it. And I think the window's opening up for very good companies.
Yeah, I would agree with that if I could jump in. There's lots of activity from an IPO perspective out there right now. You just think about all the things going on technology-wise. There's been a bit of a renaissance, I think, in the comms infrastructure space, right? SDN is out there, cloud, virtualization, lots going on in mobility right now. There are a lot of companies out there that are very interesting, that are showing the characteristics that investors like: growth, margin expansion, lots of opportunity for multiple expansion, and so things are pretty vibrant. I agree.
I actually have a little bit different agreement.
Shock. Go.
No, I won't disagree that it's back half the year loaded, but I think if you just pull it back to telecom in general, you're seeing in the European market a lot of consolidation and divestiture from all the European carriers. A lot of the Telenor is divesting, looking to divest VimpelCom. So I think in all this consolidation in the U.S. market, you've had some big carrier consolidation, and it ripples down into actually the suppliers in the telecom sector, and you're not seeing them having the earnings that they had last year. And I think this is a fallout from the consolidation from the carrier space. So while I agree with you, gentlemen, that it's back half loaded, I think if you look at the root cause for quarter one, I think it has to do with this type of consolidation.
Yeah, I would agree with the macro picture, and I would also comment more on the technology front that it's important to separate really wheat from chaff, and there's some areas that are highly investable, and we're seeing that. We're seeing sort of the layers not just get consolidated across, but also between them. So, you can have the application layer, the control layer, the transport, the bottom layers. We're seeing some interesting moves. Intel is a good example, looking all the way to the application layer. I mean, here you have sort of a chip company, right? A processor company looking at the API play. So that's very interesting. SDN's creating this whole value shift. So we're in a very unique place right now in the industry, and it's important to kind of separate and find what are some of the areas that are really investable right now. And like the panelists had said, SDN will be a tremendous consolidation play over the next 5 years. I would say M2M, machine to machine, is probably very early days, but is getting up there. And that consolidation across the control plane and the telecom network, as well as the enterprise, because the two really becoming very, very similar. And I'm sure we'll touch on that later on, but there's really this consolidation between the IT data center play and the telecom, bringing in the cloud into both sides of the spectrum and making it sort of ubiquitous transport.
Great. I think you guys already answered this, but I'm curious because I started off with a kind of a strained Fitzgerald quote, but he pretty much associated with the 20s, right, which ended it literally in a crash, and we're not that far away from a pretty big recession of our own. Is this not having any impact at all on the financial market, or if it is how long is it going to last, or is it as if it never happened? Was it like a sort of a blip?
Mark, that's for you.
Mark.
Sure. If we look at the state of affairs on a global macro point of view, GDP growth has stopped contracting for a lot of the regions. If we look at the U.S. Economy, the debate is over. Hey, is it 1.5%, 1.8%? Well, still less than 2%. But underneath that, there's a lot of value creation. So I think we would like to see better job growth. We would like to see more broad-based growth. But if you look at the innovation that's occurring in technology, I think there's a lot of hunger for companies that are creating value, have some sustainable differentiation, and investors are very hungry for that.
I think that's a really interesting kind of segue. I think a lot about innovator's dilemma when I think about this particular space. And you've got an audience here of a couple hundred service providers who do business with infrastructure vendors. And I can tell you that I've been following the space for 18 years, covering the comms equipment space. And I've got a slide in my marketing presentation that we show investors. And I've covered 60 companies over the course of my career, right? And this is a very subjective analysis, but virtually every one of those companies was a growth play, right? Had big expectations, big PE multiple, tons and tons of growth. And you look back at this objectively, out of the 60 companies I followed, and the jury's still out on a lot of these companies to be sure, but 6 or 7 of them have legitimately had an act 2, right? Where they got out there, they built a business, they dominated a market segment, built a franchise, and then growth slowed down. The market became more saturated, you got more competition, the economics of that vertical or that segment started to deteriorate. So what I think a lot about in the context of this space is innovator's dilemma. And you're very right. It's a very dynamic space. There's a lot going on. There's a ton of value creation. There's a ton of value destruction, and it's going on all the time.
And Joe, incidentally, if you look at technology companies over the last 7 or 8 years, and you add up the cumulative market cap, where we were 7, 8 years ago is actually where we are now. How is that the case? Because remember, for every Apple, there's an HP. For every IBM, there's a Nokia. Value often shifts. And Act 2, Act 3, like George would say, it's actually quite difficult than Act 1. So it's really about companies continuing to innovate, adding value, adding differentiation. And it's really for investors who can gain share, who's going to lose share, because oftentimes in technology, the winners win big and the losers lose even bigger.
And so that's a great, and you sort of hinted at this in your answer, Mark, but it's roughly getting close to a decade, 8, 9 years since there was massive consolidation in the vendor space, right? The mega mergers. In hindsight now, can we pronounce those as failures? Were they right for the time? Is it times changed? Can you guys talk about that? Go ahead, George.
I guess I would say, I'd say a few things. There has never been an industry where the buyers of something, a product, have consolidated, and the sellers of that something, that product, have not consolidated, right? So think about what's going on around here. The operators are consolidating. It's been going on for 10 years. It's a major, major trend in this industry, and as the economics become more difficult for some of the infrastructure vendors, consolidation becomes a real answer. And, GENBAND is an interesting example. If I can, plug GENBAND a little bit, these guys have done a phenomenal job of rolling up the industry and creating value, in that effort. So I think you're going to continue to see it. Catherine referenced consolidation earlier. I think there's going to be more.
I agree with you on that. I think it also comes around to where you're headed with the technology and the evolution, the innovation. That's been a lot of the discussion here. So cloud, SDN, but how do the carriers then handle cloud, and how do they handle their services, and then what is the infrastructure that supports them? So I always joke at work, there's a person that goes ahead of me in the morning meeting and says, put all your money in the cloud infrastructure, cloud players, software players. And I get up and I go, wait a minute, you still need bandwidth. Put that money back into my companies, because you still need the infrastructure around the cloud. It's just that the infrastructure is going to change, and the companies that are able to dance over that change are the ones that are going to succeed. And that's pretty much how I view it. So those who are early to catch a wave, get there, adapt the market, will go. A good example would be the GENBAND-Samsung relationship. I think that relationship will have good sustainability in the enterprise. So I think there's ways to do it, but you have to catch that wave early and understand where the technology is shifting.
Joe, I want to give you an example of what hasn't really worked well in the past and the lessons learned for other vendors that are out there. When Alcatel and Lucent announced their merger agreement, we put out a research report, and the title was, "Everything Looks Good on PowerPoint." Because the thought was, here is it, you're combining a lot of disparate assets. There's going to be synergies down the road, and we know where things have ended. And the challenge there was that they made a lot of incorrect assumptions, and they executed very poorly. Conversely, there's a lot of other companies who are actually very good at rolling out technology, adding to their peripheral. So it really depends on your fortitude for execution and your focus in terms of driving through synergies over the longer term. So I do think that the carriers have consolidated, which is why they're all doing quite well. Their margins are at record levels. I think on the equipment side, we do need a few more, but there's also opportunities for very niche-focused, differentiated companies to see very good margins.
I guess, I'm sorry.
I was just going to add to the fact that if you have the right business model, you have the right trajectory financially, and you're attacking the right market, and you're staying ahead of the curve on innovation, I think you'll do well. I just want to bring up, there's one company, Intocell, does self-organizing networks, very small play. There's a company that's maybe $30 million sort of in bookings, not even revenue at the time, went out and got taken out for $475 million, immense amount, right? Why? Because they're bringing value to guys like AT&T. It's the company that could have easily become an IPO, the next public company. Companies out there, equipment vendors out there, chose to take it out of the market because of the value, because of the trajectory and the value it brings. So there's going to be plays like this, and you stay innovative enough, you'll ride the curve. So,
George.
I was just sort of thinking, again, more along the M&A theme, and I was sort of thinking about your Alcatel-Lucent example. When I think about M&A, and I think carrier customers should think about M&A in the same context, right? There are different kinds of deals out there, right? There are financially driven, synergy-driven deals, okay? And a lot of those, looking back historically, haven't worked very well, in all honesty. If you look at the deals where, I tend to think a lot about M&A deals that create value for carrier customers, right? Can you bring a technology to market faster by acquiring a business or a technology? Can you, open up a new adjacency, leverage a new product through a distribution channel into that customer set that is value added? Those are the kinds of M&A transactions, I think, historically that have been more successful. And, let's be real, this industry is littered with M&A transactions and in hindsight haven't worked. And it's something I think a lot about in the context of M&A.
That's what I sort of was getting at, was those transactions seem to be driven by this I guess, false sense that operators required an end-to-end provider. Every piece of equipment, they could only deal with one company. Is that, I guess that's the thing I'm thinking of. Is that a failed philosophy or a mechanism? And would you not advise someone now who's out there to not pursue that strategy? Or
Yeah. I would just jump in real quick here, but it actually still works, I think. Okay. There's the best of breed that's always going to stick there, and then there's end-to-end play, and I think both will march along. And I would bring, for example, Ericsson. Here's a company that used the best of breed products along the curve, the 2G, the 3G networks, LTE, they've chosen to go all in. They've accumulated a tremendous portfolio of products. And I got to say, GENBAND's probably following the same curve. But here they have the unified communications, the small cells, the VoLTE stuff, the RCS. Everything you can think of, they have, and they're choose to go with their own portfolio to their service provider. Now it's up to the service provider now to decide, do they have really the best technology? And I think that's where the best of breed will come in and win over at the end of the game, because they might have that latest feature, or they might be better off in terms of the value that they deliver. So my opinion is that the two will continue to march along, but there's definitely this end-to-end play that's becoming stronger and stronger as consolidation sort of happens.
I also see that fact that there's certain technologies that start out and they have this hype. Good example would be femtocells back in 2007. You had Airvana, IP Access, Ubiquitous. Everybody was investing in these. AT&T finally deployed IP Access through Cisco, and then finally this year they bought Ubiquitous. So you're seeing this now. The femtocells have emerged as the small cells. So you're having another evolution of this technology, and then the players that support it from the infrastructure are now figuring out a different way to dance. If you were just a femtocell, you need Wi-Fi. Do you need to marry the two up? And then how does that turn in serve for the carrier for their overall business? So I also think that these different technologies stair-step, then they fall back out of flavor, but then they come back and they evolve in a different way as people get used to them. So that's another thing that's happened over the years. Just like soft switches back, the first one that went into level 3. That was, then all of a sudden you had SBCs, 4 years later. I remember at Bell Labs, us talking about SBCs for that soft switch, but they really came into vogue 4 years later. So you just see a new use after it's initially put into deployment. It drives more technology.
I have a little different opinion. I think
okay.
the days of the end-to-end supplier are over. And if you look at the margin structures in this industry, the companies that are truly end-to-end in the carrier space, those are ugly, difficult margin structures. And at the end of the day, operators buy best-of-breed solutions, and they're willing to integrate. And not to say there's not examples where an end-to-end solution in some areas of the network makes some sense, but gosh, at the end of the day, I look at the Alcatel-Lucent, for example. That hasn't worked, and it has not worked.
I agree with you on that. I'm just saying a different. I
would
agree
say,
that hasn't.
I would put comm technology in two buckets. One would be, does your technology add capacity? Does it get better every single year? Or do you actually innovate? There's differentiation and there's value creation for the service providers. If your product is, for example, a switch or a router or what have you, a transport system, 40 gig capacity, next year it's 80, then it goes to 160, the carriers won't turn around and say, let me pay you 3 times as much for the same product. They'll say, I'll pay you the same. So that there's this deflationary impact in some of the products, which I think is a detriment to the financial models of some of these large system integrators. The flip side of that is where you could actually say, look, adding the value, not just at the endpoints, but through the connections, the intelligence you can provide on top of that, it's really giving you the ability to charge more to your customers. Subsequently, my margin should be better. And I think the companies in those areas that innovate in a non-linear access can actually do quite well.
Excellent. Okay. Switch it up a little bit and talk about investment or CapEx in the coming year, next couple of years. So where's investment going to be concentrated in the network, and what portion of the network or what segment of the tech sector? Anyone?
I think it depends if you're a wireline carrier looking at like the wireline. Liberty Global was a good example today, but on the obviously LTE builds, and then also how to deploy more services, etc. Everybody's putting SDN or next generation or the network function in their labs. So I see it's a couple of very specific areas that they're spending on. I do think CapEx comes in on the wireless side eventually after they deploy LTE. So in the United States, you have Verizon at 16 billion, AT&T at 20, and in Europe, they're just starting to deploy LTE, but they're still keeping their CapEx relative to their revenue. So it's roughly 14% of revenue. So it hasn't really, even though you have a new technology shift, it hasn't really accelerated CapEx.
Mm-hmm. Mm-hmm.
One of the things, and I'll let you go, George, afterwards, is that we've done a study of across the globe, all the major top 100 carriers and their inclination for CapEx in 2013. We roll it all up, and it's actually quite a big number. It's $205 billion for 2013. Wow. So huge. China is a big chunk of that. But in aggregate, 2013 CapEx will increase by 12%, approximately 12%. So double digits for the first time in almost a decade. Net out China, it's about 6%. Now, the actual spend and versus what they say they're going to spend is quite different. So we do need to close that gap as we progress through the second half of the year. But these are substantive numbers that actually can swing the needle for the right companies. So the inclination, I think the numbers are pretty big, but most of the carriers, except for some of the European carriers, the margins are in good shape. The CapEx spend, it's quite different from maybe 6-7 years ago where you said, you know what, I'll spend it, I'll cross my fingers, and hopefully I'll get a return down the road. Now they know, look, some of these things that you do, they're going to get a quick return. It helps to reduce churn. The revenues are actually starting to increase for the carriers. And this is during a period of record margins for some of the U.S. guys.
I think that's a great analysis. I think it's super important to know, which way the wind is blowing in the industry in a sense. But I tend to look at things a little bit differently. I think it really depends. Your question was, where's the CapEx going to get spent, right? And I think it really depends on what's going on competitively in the industry. One of the things that I thought was really important in this industry was to see Verizon really get out in front of the industry on LTE investment, right? I mean, Verizon, to their credit, started a year and a half ahead of the other major wireless operators, as an example. They have phenomenal marketing people at Verizon. I was getting ready to watch the Verizon marketing people to pull out the bazooka and start shooting, bombs at AT&T and T-Mo and Sprint around the fact that they were ahead on LTE investment. And so you could kind of sit back and look at where the capital was going to go. You knew that T and Verizon or T and T-Mobile and Sprint were going to have to throw the pedal down from an investment perspective. LTE is the point of the spear competitively right now in North America, and I think it will be in some parts of the world internationally. I look at data center. That is the point of the spear right now competitively among the operators. There's massive investments going into data center right now. And I think one of the other really interesting questions is, okay, you've got this great big sucking sound going on in these areas of the CapEx budget, LTE and data center. Well, where's that capital coming from, right? There's always more projects than guys have capital, right? These are competing priorities in a sense. And so I see a lot of capital coming out of the legacy areas of the infrastructure right now. Through this earnings season, last couple earnings seasons, I have been completely blown away by how fast the operators have taken capital out of legacy areas. It's been mind-boggling. I've seen areas where guys have really stalled investment temporarily. You look at North America last year, we saw a big stalling of investment in optical transport. We saw a big stall of investment in routing. I think a lot of guys are running networks hotter in those areas so they could go and fund data center and fund LTE. And so I think a lot about just sort of this competing priorities idea on CapEx and on budgets, and it kind of colors our views.
Well, the other thing too, Sornalia, is it also, if you're doing LT, there's only a few guys that really win in LT, which is also not helpful for all the infrastructure players, because it's the big base station guys when they lay out the network and the radios, and there's only a few of those. So initially, I think it only helps a lot of the larger ones and not so many of the smaller suppliers.
Yeah, I would just add to that I think service delivery, service creation is a very important part of where the CapEx is going to go for the service provider. What are some of the areas where they could potentially lose customers or subscribers? Is it voice? Is it the legacy sort of broadband type of infrastructure, and what they need to do to enable better services and protect their networks and monetize them better? And so that's where the CapEx, in my opinion, would go. There's this whole concept of, like we said, telecom cloud. How do you enable business service now on the telecom network? That's a very lively aspect of monetizing the carrier network. And the view is really, if you have the web scale data center, you have the enterprise data center. The cloud computing already began years ago. The virtualization part had already started too. Now it's all that just shifting into the telecom world, into the central office. And so you have the web scale guys, the Googles, the over-the-top guys with their version of the data center. You have the enterprise kind of following the trend, and now the telecom following the trend. And you have one ubiquitous sort of network, IP backbone, basically, that can deliver those services. That's a very powerful proposition. And they stay ahead of the curve and innovate and put the CapEx dollars into enabling that quicker and faster. They'll reap benefits and protect their ARPUs and subscribers on their networks.
Great.
And add new business services too.
I just wanted to add that CapEx is going to go where the money is for the carriers. And if you look at your wireless bill every month, by the time it's all said and done, each one of us will either pay AT&T or Verizon $90,000 to $100,000.
Yeah, keeps going up. Right.
There's no changing that. So hopefully there'll be more competition in the form of Sprint down the road. But this is a great money-making opportunity for the carriers, and I think that's why they're incentivized to upgrade and develop new networks.
Mm-hmm.
I think Dmitry has a great point. I mean, for me, it just feels like the operators need to really get their head around offering new services and creating new revenue streams as fast as possible, and that's where the ROIs are really going to be longer term. And the DNA of this industry right now is all about dumb pipes and providing pipes at lower cost per bit. Every month, every year, every quarter, it's 35% more capacity for the equipment devices I sell as an infrastructure supplier for the same CapEx dollar, right? Look at the bandwidth growth compared to the CapEx data. It's a very easy analysis. So from where I sit, this race to the bottom is difficult. And, we're spending a lot more time thinking about equipment vendors that are really doing this stuff in layers 4 through 7 You look at the equipment community that a lot of us follow, again, they're about lower cost per bit, right? Lower cost per bit. It's the DNA of this industry, carriers and equipment vendors, and it's a big challenge right now. I think about, companies like BroadSoft. I put GENBAND in this category. I think what Oracle's doing right now is phenomenally interesting, right? That could be a really interesting play in layers 4 through 7, right? With the Tekelec and Acme acquisitions. I think if there's an infrastructure supplier that can really figure that out and help the operators hold their hands and get them into more service generating, more revenue generating opportunities, I think that is really compelling.
I would underscore what George said in terms of Oracle getting into the market. I mean, a lot of people had scratched, especially the financial community, had scratched their head what's going on, why they went after Acme Packet. I mean, here's the enterprise company, right? For the most part, they have a little bit of a billing infrastructure that they deliver into telecom world. Went and bought Acme Packet session border controller, which is kind of a very narrow technology, if you will, right? But I think just to add, I think their strategy is really to go and create value and create a service delivery engine and deliver that to an operator and scoop up the services layer, the control layer, the application layer. Right? And they can leave the transport to the box guys, the routers, and the switches out there. But consolidating those top 3 layers is important because you can tie that into their billing infrastructure, you can have policies tied around that, and you can deliver specialized services to subscribers and protect those subscribers on their network. And essentially that's the play that Oracle is seeing. And I would say there'll be more to come because Oracle competitors are probably scratching their backs and thinking what they need to do. The SAPs, the IBMs of the world. How do they participate in one of the largest verticals of the IT spend? Which is, I think we looked at it, it's roughly $1.7 trillion in terms of revenue that's spent on the telco vertical in the whole sort of IT game. So it's a large market. Oracle definitely sees that and taking advantage by going through their sort of strings of pearls. So they're probably more on the way, my guess. I don't know. I don't have a crystal ball, but that service delivery, service creation is quite important. I think that's where they're heading.
Well, and you've seen some of the consolidation in last year. You've had Cisco buy BroadHop. That's a service layer. You have OpenNet, private company out there. You have the Alots and the Broceras and the Sandvines that do DPI. Mm-hmm. They've had a nice run. They fall back. One of the discussions on when you're a smaller single supplier, not like an Alcatel-Lucent, but these standalone guys that come and ride an early technology curve, they've been penalized in the last because, already in Europe, even the market is saturated, but they finally did the tiered billing, so they don't really need as many of these DPI boxes because they've already controlled some of the mobile growth through tiered billing. Mm-hmm. So that's had a ripple effect on some of these smaller growth. So is that whole industry consolidated, or there's others yet to consolidate in that space? That's one area.
I was going to go to the audience, but I just sort of finish this train of thinking because we're into the sort of the policy management, BSS, billing systems, and you said there's been a very, very hot part of the market, a lot of consolidation. So the prospects are that this equipment is actually going to be used and deployed to deliver, specialized services and tiered services. When's that going to happen? Is it happening, or what's it going to look like? What's the next stage of this when they can really start to exploit this and monetize, some of the policy capabilities of the network? Good.
I'm gonna put a little angle, a little twist on your question, but sure. One of the real easy things that I think is potentially out there that is phenomenally interesting for the comms infrastructure providers and the carriers is to figure out how to do targeted advertising, right? I watch Google and Facebook and the internet content guys co-opting the value in these networks every single day. The operators are the back office for these internet content guys, right? And I get it, it's part of the experience for the subscribers, I totally got it, but they are capturing the value add in these networks. And we spent a little time in our shop with our services analyst, Tom Seitz. He and I wrote a report about privacy and about what's going on in the regulatory environment and how the regulatory environment may be changing, right? So level the playing field and allow the operators to use all this phenomenal metadata that they have to go out and also get in the targeted advertising business. It's phenomenally compelling. We looked at what a $5 boost in ARPU could do. And the backstory here is there are some regulatory hearings that are going on in Washington, D.C. this summer that we've heard about that are looking at the potential for leveling the playing field. Again, Google and Facebook use your metadata as a subscriber very aggressively in this targeted advertising world. The operators have a much better opportunity to do that so much more effectively than Google or Facebook. You have much more information about your subscribers than Google does, if you think about it. So there's this opportunity, I think, percolating in targeted advertising that's out there for the operators. And we did some, again, back-of-the-envelope math. A $5 improvement in ARPU on a monthly basis for the operators translates into 1% to 3% revenue growth for this industry. From a top-line perspective, it translates into a much more outsized opportunity from a margin and profitability perspective. You think about Facebook. Facebook gets $1.40 per month per subscriber for targeted advertising. Okay, that's one application among many in a big network infrastructure. Why can't the operators get $5 in ARPU per month? The newspapers get $12 per month in advertising per sub. TV gets $35 to $40 per month per sub. This shouldn't be that hard. Like, we level the playing field. There's a lot of infrastructure suppliers that can benefit from this. There's a lot of carriers that can benefit from this. It's a big opportunity, and it's pretty easy, and it's been done before.
Awesome. Anyone want to add on that? Audience, anyone have a question? You brave souls. Oh, it's like Jennifer, if I can see you correctly. Hang on, here it comes.
Oh, not at all. Okay, we've had a lot of questions, comments. A lot of people have brought up the innovator's dilemma. You all mentioned that for every Apple, there's a, for every IBM, there's a Nokia. For every Apple, there's an HP. So, and you've also mentioned that SDN holds a lot of promise for some of these vendors. Does the specter of SDN on the horizon, what is that promise for the traditional router vendors as they are facing the threat of having their equipment lobotomized and having the data plane and the control plane separated? What are we going to expect to see for Cisco, for Juniper, and the traditional router vendors?
Sure. I'll start off and pass it to you. If we look at the value creation for some of the traditional companies, and we've touched on this, of how they add capacity, over time, I think SDNs will kind of change and extract some of that value. If we look at SDN bookings right now for the industry, it's zero. SDN revenues for the industry, it's zero, but it's going to come someday. The value of separating a lot, there's an opportunity for who actually ultimately controls that value, who's the network control plane. So it's really Cisco and Juniper, their business to lose as other people provide some solutions, because you can say, look, it used to be combined, I'm separating it, but if I'm separating it for control purposes, I still need to have that intelligence on top of it. I used to joke around that it's similar to the airline industry, where your airline ticket is a little bit cheaper because they separated, they took out the meals, but you still have to pay $6 for the can of Pringles. So if you're the right person providing that service, you could still win. If not, it's going to be disintermediated.
I agree with what Mark said. I think Cisco, Juniper, these guys, I mean, they're worried about what's going on, no question about it. There's definitely this co-opting of sort of a custom purpose-built box that they've delivered to carriers, where the value now is taken out of the box and put together with the application or services layer. And so they see the trend, and rather than just punting the ball down the field, they're trying to embrace it. But that alone opens up a whole new field, right? There's new players. There's SDN guys that are jumping in. There's virtualization, network virtualization guys that are coming in, trying to deliver best-of-breed products in that regard. And so it'll be interesting to see. One thing I would say, though, is it's interesting to separate NFV from SDN. There are two separate technologies. NFV, in my opinion, is a lot easier to implement, because all you're doing is you keep your network steady state as it is today, and you're just taking out elements and virtualizing them and putting them on the server as opposed to a custom hardware. platform, right? So your network hierarchy remains the same for the most part. It just becomes more flexible because you can shift capacity across the network and you can do other new things. SDN is a different concept. It requires, in my opinion, a whole architectural shift in the network, introducing a new element in the network, like an SDN controller. And so can the legacy equipment work? That's the number one question. And so there'll be some tweaks to that, and there'll be new breed of devices that are going to be introduced. And so because of this architectural shift, SDN probably will take some time to pan out. My guess it'll be 3 to 5 years out. NFV will probably happen. We're already seeing, we've heard great presentations across this conference from Verizon, AT&T, Liberty Global, that are already showing signs of how they're virtualizing their elements, whether that's a DSL router and set-top box, or a virtual EPC, or even the virtual headnet, just shifting capacity across the macro cell or a small cell. So NFV is here today, and it's extremely important to see, or refreshing to see how fast that's moving.
So I'll answer your question directly. I think Cisco and Juniper will be just fine, and that's probably a fairly controversial answer among many investors. The latent threat is big, right? Technology transitions, and this is a big one potentially. That's when market share shifts. That's when the incumbents can lose, right? But they're coming at this market with ownership of the relationship with those customers. They've got technology plays. They've got a humongous amount of resources to throw at this. It's a real likelihood that those guys will be, relatively successful in executing in this space. Now, you step back and say, well, what about the commoditization of the hardware, right? Gee, isn't that a big threat? These guys sell fewer ports, da-da-da-da-da. Okay, I totally agree with that, but let's think about something. This space, and we talked about Moore's Law earlier, right? This space for years and years and years, since I started following 18 years ago, has been all about reducing cost per bit in these networks. And I think a lot about SDN in that context, right? SDN is about helping operators eliminate the operating costs of provisioning services. It's about helping these guys create new services and new revenue streams. I think that's an awfully big byproduct of SDN. It's not just about commoditizing the hardware. And I sat in an SDN conference for 2 days in Santa Clara a couple weeks ago, and everyone who got up on stage talked about SDN at length, and they talked about those other aspects of it, not about commoditizing the hardware. And so my gut is Cisco and Juniper will be okay through this. We'll see. Time will tell.
I agree with you, and I think one of the reasons Oracle finally danced into this area is because they see the operators wanting to be more software-centric. And I think that this gave them an opportunity with the shift to SDN for them to actually go after that market and compete against Cisco and Juniper in that area. That's one of the things. The other thing I think on SDN and NFV is I think the operators will take certain elements first, and I think the routers will be down the road. So it's harder to do signaling, then it's harder to do packet, and then it's easier to do maybe web servers and messaging systems. So I think they will take the operators, will go at it from more of an NFV point, but then at a higher level, layer 4 to 7, and then down. So I think right now, unfortunately, Cisco and Juniper, since Nicira was acquired by VMware, have been suffering this software-defined networking overhang on their overall for their stocks. That's the way I've been looking at it.
Excellent. Any other questions from the audience? Oh, there we go, up front.
Hi, we've heard a lot of talk this week about new service delivery and how easy it will be. And the assumption is always, seems to be in the background, that we have very solid high bandwidth networks to deliver all that stuff on, to support that. My question is around this DSL versus fiber debate. It hasn't come up so much lately, and I want to know, does the financial community care? Certainly some companies are going one way versus the other. Do investors care as long as the bandwidth is there, they don't really think about it much?
Question. Anyone want to?
I would say the more the better when it comes to bandwidth. And I think the notion with some of the copper technologies is that there's a terminal value which decreases over time. So if you're future-proofing your network, I think that gives better insight for the investors who are looking at all the new services that can be delivered, and you don't want that limited by, of all things, by bandwidth.
Yeah,
Which-
Go ahead.
I would agree. I mean, investors do care if you can enable new services and find that great company and that's monetizing that network. I mean, it's the end of the game. I look at Google Fiber. I mean, what they're doing, it's creating a complete ripple effect across the industry. Here are those guys. In fact, one interesting factoid I read a couple of days ago was Akamai actually put out a report and said that the Kansas City, where Google Fiber launched first, the average internet speeds in that city grew by 86% year over year. The next one down was another city where fiber was deployed, and it was somewhere in the 50% range. So, and then you go down to DSL sort of countries, and it's in the teens, right? So that alone gives you a ton of service capability, ton of new services, and companies can innovate. New applications, Uber, whatever it is. I mean, new business service. You can run over that fiber a UC service if you like. So that creates opportunity for investment community to look at new innovative companies.
I think your question has two answers. So investors hate fiber when you announce it, because your CapEx is going to balloon, your cash flow is going to go down, your stock's going to go down. Let's face it, guys like us are short-term oriented, right? The other answer is they love it when you've made the investment and they now own the stock and they view you as being really well positioned to handle, bandwidth growth over time, right? So it depends. Google Fiber, I'm very cynical and jaded about Google Fiber. I mean, clearly it's just an exercise. They're not in it to be a service provider. It's an exercise in prodding the operators along, right, to get them to invest in their broadband infrastructure. And the thing that really tells you that, in Kansas City, the first markets they invested in were the most economically challenged neighborhoods in Kansas City, which is the total opposite of what you do if you're going into a neighborhood or a business to make money, right? So
Well,
for me, I was like, okay, this is just about playing a game with the FCC.
Right,
That's it.
Fair enough. I agree with that. But I think the point is that it creates a ripple effect across the industry. And we heard AT&T, we heard CenturyLink, and we heard Verizon all announcing plans for 1 gigabit per second links. And that helps everyone here. So, just because it's what Google's doing, essentially we're all
The user data is very interesting, no doubt about it. What would subscribers do with that much bandwidth? It's interesting to see.
We'll find the use for it, right? There's always that.
Don't you have 27 iPods at your house?
Yeah, exactly right.
We have time for one more question from the audience. Is it out there? Oh, up front. Hang on a second, Cynthia. Right behind you.
Hi. Yeah, we haven't talked about security. It's been talked about over the last couple of days, but what are your thoughts on investment in security as a service from the service providers, that sort of thing?
Security. We did hear today that the number of threats have gone up and the bandwidth of them has increased. There are a ton of companies that are about to IPO in the security space. The big debate, I think, certain carriers use certain suppliers for their internal network and others for their managed network. I think the threats have just increased every time I do a security report once a month and just talk about the number of threats that's just gone through the ceiling, the number-wise. And even at Mobile World Congress, I was surprised at the number of carriers I met with that had asked people to come in to talk about security. So it has really ratcheted up on everybody's radar. There are more RFPs from the carriers out there looking at replacing older firewalls for the newer ones. So you're seeing a lot of activity around security, and that is ratcheting up in the carrier's budget overall, just from a higher level on it.
I would just add that for security, it's another great services that the carriers can offer, not only demilitarizing particular zones, but also enabling all these new devices and providing services for everything that we're bringing to the office. Each of you probably has about 3.5 devices per person now that on mobile, so all that security I think is very important. So it's really the service providers, their opportunity to harvest that.
Great, great. So we just have a minute or two left, so I'm sort of shortening the question I was going to ask Joel at the end. This is one time I'm going to ask each of you to reply to this. And at first I was going to ask you to name the company, the telecom vendor company that was going to grow in stature throughout the year and at the end of the year. And obviously the answer is GENBAND, so we'll make it easy on you. And I'll just ask you, we'll make it a sector, a segment. So arguably policy control has been sort of the hot technology for the last year or so. And end of 2013, we've talked about WebRTC, SDN, still SBCs are out there, and diameter controllers. Each one of you, we'll start with you, Dmitry. Just what's going to be the hot technology at the beginning of 2014?
Well, I think unified communications is one very interesting area. I mean, this is where you find growth in a comm equipment space, which hasn't really been a high flyer, right, from the start. But UC gives you that 20% potentially growth, 25% kind of is where we're looking at. And so that's a very interesting area. Open API, I would say, is another one. And in fact, we just saw within the last 2 months, 3 open API guys being taken out of the market, right? Layer 7 went, Mastery went, and I'm blanking, there was one more.
All right, you're done anyway. So
anyway,
you had your two.
yeah, so those two are probably
Go ahead, Jude.
very important.
I would. I have 2 answers to that question, again, like the other guys. So I'm blown away by the DPI vendors. I don't follow the DPI vendors. They're tiny market caps. They're $250 million market caps, all 3 of the companies. If some of this legislative stuff goes through, if the operators get an opportunity to become relevant in the targeted advertising business, those businesses are all home runs. And I can't tell the difference between them. I don't know who wins, who loses, but that's one observation I have. They become much more relevant companies. The other obvious, I think, answer here is Oracle.
Interesting. I'd like to take a different perspective. If you look at technology over the long cycle, companies come and companies go. There are those who innovate on a linear axis. Every year they try to do something better, but you don't get paid for it. And then there are others who really add value to the service providers. And I think there's a tremendous opportunity for someone like GENBAND to actually take the torch from some of these legacy guys who have not been innovating and to kind of move that forward with the customers who are looking to add value for the enterprise networks and for their carrier networks.
Excellent, good answer. Catherine?
I'd go with George on DPI, actually. I think that's actually one area that's this year will have an interesting fallout. It's going to go one way or the other. And if they can change some of the FCC stuff in the United States, it does enable them. But you also have the Cisco routers and some of the other things that can handle that. But that's one area. The other one I think is, what's going to happen with Alcatel-Lucent, and they're really struggling, even with the new CEO, and they have my retirement plan. What's left of it. So I think, how that falls out in the next 6 months, and do they marry up with perhaps Juniper and become their own monopoly, or do they spin out their own, the IPD assets out of that? So I think there's some different things that can happen just on watching that aspect of it.
Excellent, great. Hey, I want to thank everyone. I know Deborah Norville had sweep week to deal with, and you guys had your earnings this week. So I really appreciate you guys showing up, and thanks very much for your participation. Thanks, everyone.